Good morning, traders. Welcome to the TMT Stock Market Strategy video for Monday, November 14th. All right, so we had a little bit of movement to the downside. That was quickly bid up, and markets ended up pairing some of the losses, at least the NASDAQ and the S&P, while we have major divergence going on. Bonds getting clobbered. I mean, and I said this many times, if this bonds continue to move lower, rates continue to go higher, it's just inevitable that we're going to get a big market sell-off. At the moment, we have the transports rallying, we have the Russell rallying, and we have the NASDAQ, the Dow, and the S&P moving lower. And it's a lot based on some of the high beta names, such as the high technology names, the Amazons, the Googles, if they want to, if you will, call what they call now the FANG stocks. It's just crazy, but Apple, Google, Netflix, stuff like that, Amazon, stocks like that are actually now selling off. So we're getting a sector rotation now. Is that good or bad for the market? Well, it's actually good, because when you have sector rotation, money is just moving from one sector and going into another. It's still staying within the whole market, right? But if you have the tech moving lower, and then you have financials moving lower, and some of the key instruments that need a rally to keep this bull market sustained, that's different. But as of right now, we have a sector rotation where we have financials, coal, steel stocks, biotech, all moving up. And where we have NASDAQ and usually in the general market, retailers, all these other names moving lower. So you have to be aware of that, and you have to understand how the sector rotation is going to form now that Donald Trump, presidential elect, is going to be sworn in January, right? So we got to pay attention to that. But I do think that we got to watch bonds as well. Bonds has been getting clobbered. You can see that the 10-year, this was our ascending triangle. We hit the 185 mark. We blew right through it. So it is a bit extended. We're outside the Bollinger Band. I'm expecting a pullback just like this, and just like this here, before we go higher. Okay, it's not going to go straight up. Here's the TLT, and as you can see, we're at right now well below the 76% retracement. We're coming into some really good support here. I would be a better buyer than a short seller in the TLT, but as of right now, if we can run back up and fill this gap area here, which you can see is going to need to be filled, and most gaps do get filled, guys. I mean, very rarely does a gap not gets filled. So you can see that here, this gap area that's going to need to get filled. So I'm looking for that, looking for a base building, and then look to buy TLT on this move higher. And you can see our premium video subscribers. This is off a daily chart now, okay, just to show you what we get. We identify patterns, we identify support, resistance, actionable areas, okay, where you guys can trade off of. Very valuable tool here, and this is all based off our algorithms that we have that's in our trading room, okay. Next is going to be gold. You could see, and I mentioned gold. I mentioned to you guys many times, and I get a lot of emails that you guys are doing well, so that's great. Don't buy gold here, guys. Don't buy gold. I think gold's going to dip one more time just like this. And what happened? We're in our target zone area now. Now it needs to hold here, because if gold does not hold this area here, okay, and this is, you can see, this is a very big area right here. So it needs to hold 1212. If we lose 1200 even, let's call it around lot 1200, we're getting right to the 61.8% retracement. But here's what worries me. On the volume profiles that you don't see, we have a thin zone here, and I'm going to show that to you on the GLD. Let's take a look at our GDX first. You can see we're coming into an area, and I said, what did I say, 18 to 20? I'm going to really like to buy this. But again, with the election, take your time. You don't have to start nibbling in gold at the moment. Gold is right now getting clobbered, and you can see that it's getting hurt pretty bad. So we lose some of these key areas here, you're going to end up getting into that 18-ish area pretty quick. And if we lose this area here, we lose $18, we're going to really flush all the way back down from the beginning of the year of 2016. Here's the GLD. On the first target has been hit. We're looking at the second target of 61.8% retracement. But remember, if we lose that, look what's happening here. Here's that thin zone that we were talking about, right? That whole area here, right? We're going to get right back down to the January 2016 start. Okay, this is what we're looking for, all right? Now, if those of you who are patient, with many of you are, and I've gotten emails from you stating that, you're going to really enjoy the next rally, because the next rally should start challenging the highs and take out the highs, because we're in a second stage bull market here in this GLD. That's what it does. Let's get into the indexes. We talked about this area here being filled. We did get a gap fill here, almost to the penny. So I'm looking for now for some downside action. I'm looking for this bearish rise and wedge to continue. Now we might get another day or two of a push higher, because that's going to help our two leaders, which is the Russell and of course the dead transports, which is deemed our leader. Now Nasdaq, as you know, is falling out of bed, and we're going to talk about that in a minute. But again, here's our 60-minute view with our volume, with our support resistance zones. You can see here we have the areas of RSI and MACD now that have peaked are now rolling over. Not a good sign. Okay, not a good sign at all. Here is the Russell. You can see just exploding, and you could think about it, guys. Why would this do that? Where the Nasdaq and the S&P going high? Well, either going to get a sector rotation, right, going into the small caps. That is absolutely possible, you know, as of all of the indices. And then you have the Qs, which is not really, I wouldn't say falling out of bed, but I think we're going to fill this gap, and we're going to end up taking out the double bottom low from the Brexit low and the election. All right, that's going to be the next Q, the 38% retracement, and then we should retrace back all the way back down to the 61.8 on the Qs here. And here's that chart I wanted to show you, that Dow Jones and the transports. This is the ETF, the diamonds, and the transports, the IYT. And you could see now that clearly that we're now both indexes, which needs to go in sync with each other. As far as the Dow theory is concerned, we are moving higher again. So we've taken out the high. Now Dow made new highs, but the transport's still well below the highs, and it looks like it's starting to do so. That could help us, even help the Santa Claus rally. But just wanted to be careful. There's a lot of missing pieces now for another move higher, where you have the Nasdaq getting beat up. Banks are actually doing well. But you got to be careful. You got to be careful, guys, because like I said, bonds are really getting hurt really bad. I do see a rally sometime this week forming in bonds. But again, that does not have to happen. Let's take it one step at a time. The thing is going into today with a neutral stance, and then playing the side, wherever the side that market starts to break up or break down. But I could see that the markets are a little in trouble, especially when you have technology really not participating. Okay, let's see what happens today. Have a great day. We'll see you tomorrow.